We've got Vishal Manchanda, who is now joining in. He tracks the pharma sector closely. Vishal, good to have you on board. I just wanted to understand your outlook, on what the culmination of this deal, as and when it just plays out, could potentially mean for Cipla and being the second largest pharma entity as well within the space as a whole.
Right. Cipla has been the most valuable asset that the Indian pharmaceutical industry has produced. So maybe one of the most valuable assets that India has produced, and that's on block today. Torrent Pharma is it's being speculated that Torrent Pharma is likely to kind of buy this out. Potentially, so we will see consolidation, a large consolidation happening in the space, and probably I think this would fuel further consolidation. Once this goes through, we might see other assets as well coming on the block.
That's quite interesting. I also wanted to get in your overall view on the pharma sector, right? Because last 2 years, the IPM growth has primarily been driven by price hikes while volumes were subdued. What do you think are the growth drivers now when it comes to IPMs?
Pharma sector has been facing challenges. So like one of the core challenges that the sector has been facing are regulatory challenges. So on the US front, they have been facing compliance challenges, and in India, there are volume challenges. So as such, the volume is growing in the industry, but what's happening is the branded prescription formulation space is not growing as much. The branded prescription formulation space is getting cannibalized by trade generics and Janaushadhi business. So that's the challenge the industry is facing, and probably that's also what's fueling this consolidation exercise. So companies are giving way to, the smaller companies are giving way to larger companies, but this one is a different transaction, a larger company probably on the block here.
And given that Indian pharma companies have posted a strong Q1, there has been a reduction in raw material costs that has led to that, better demand, lower price erosion. I just wanted to understand what your outlook is in terms of demand going down the line. Do you believe that it will continue to be steady? What is it that you're penciling in by way of financials?
So what's happening lately for the pharmaceutical sectors is, Indian pharmaceutical sector is the US business has started to do well. But probably that's driven not by a basket of products, but kind of very select products driving earnings for companies and also driving margins for companies. There has been softening of raw material costs. I think that will continue to stay. Another positive aspect about the pharma sector is prices in the US have now started to, price erosion has started to bottom out. So what used to happen is whatever new launches that companies made in the US, they kind of ended up only compensating for the erosion that the base business witnessed. Going forward, what we'll see, whatever new launches companies make in the US, they'll add to the growth there. But structurally, the US business is challenged because generic penetration is already at 90% in the US. So the growth opportunity is limited.
Right. So what's your view on the competitive intensity that does remain high, because that's been reflected in the high number of ANDA approvals as well coming in?
Yes, so the competitive intensity is still high, although it is declining. Companies have been exiting products, and there are companies which are closing down manufacturing facilities. There are multiple companies that have gone bankrupt in the last 1 year in the US. So there is a decline in competitive intensity, but it still remains high. We'll need to see, and we'll wait and see how this competitive intensity behaves going forward. Pricing is still kind of not to levels where companies can sustain. So pricing needs to improve if companies need to sustain in the US. So I think the competitive intensity may further decline because of the fundamental issue of sustainability at current prices.
Right. The other thing I also wanted to ask about was, we've been hearing that major pharma companies like Teva in the US have reduced their R&D spends this year because of the demand concerns. How are you reading into this?
So R&D obviously is R&D in pharma has very uncertain outcomes. Indian companies have also been spending a high single digit on R&D, but we are not sure whether what companies have spent on R&D has yielded desired outcomes. And if we look at companies like Teva, Mylan, the global giants, they also are under a lot of debt. So their balance sheets are very leveraged, and they need to ensure that they generate healthy cash flows to service the debt and interest on the debt. We have seen multiple companies going bankrupt in the last 1 year. So probably as a matter of caution, and we know R&D has uncertain outcomes. So it's wise to kind of pare down R&D and focus more on sustainability, because R&D is a growth driver, and right now the question is sustainability.
Okay, thanks so much for joining in, Vishal, and giving us an overall view of how things are shaping up within the entire pharma space.